a very diverse panel who have invested throughout the region, and specifically in Vietnam, in distressed assets, in real estate, and then in operating businesses. And we also have an expert in structuring some of these investments. I thought I'd start with really trying to define what a distressed deal is and what a buyout deal is, so that we can all be talking off the same page. My own experience, and I'll start off with distressed. Really, distressed situations are where you have a fundamentally sound business which, for various reasons, has some short-term liquidity issues, and where there's an opportunity for an investor to take some risk, and because they're taking on that additional risk, generate superior returns. A practical example I'll give is, for example, those of you who may remember back to the dot-com crash in the United States, we had a massive overcapacity of data centers, and a lot of these data center companies were quite highly leveraged, to the point when the dot-com crash happened, there was a massive drop in demand for data centers. The cash flow dried up, they didn't have money for working capital. And that's when the strategics, Microsoft, Google, Amazon, Yahoo, we started having to buy data centers because a lot of these operators were at risk of going out of business. So let me start with Chandra again. How else would you define a distressed deal?
I guess speaking on your own definition, I think I'd probably extend the definition to say it's sometimes not only pure liquidity issues. We actually come across a lot of situations where they've actually defaulted. It might have been driven by liquidity issues, but eventually they basically, because they over-leverage situations, ultimately end up defaulting. So in our view, a distressed would encompass the whole range of stressed to distressed. So I would probably put the liquidity sort of probably more in a stress situation, a full-fledged default as a distress situation. But I think we tend to stay away from defining ourselves as a distressed investor. We probably define ourselves more as special situations. That sounds a little better. When you're talking to the companies that you want to invest in, nobody wants to admit that they're distressed. But I think we tend to sort of encompass the entire spectrum.
Baron, can you shed some light on how you see distressed situations in real assets, such as real estate?
Well, I think, again, we like to call ourselves opportunistic, right? You call yourself special situations. So we all have our own sort of definition of how we portray ourselves. But I'd like to go before Chung goes, because I'd love to hear the legal definition of distressed assets here in Vietnam. But I think that, especially in this part of the world, it is relevant to the market that you're dealing with and to the asset class that you're dealing with. So, a distressed asset in Vietnam may be clearly distressed in places in developed markets, but in Laos or maybe even Cambodia, it wouldn't be as distressed. So, in the real estate market, finding distressed deals is quite difficult, just because it's all sort of on the undercurrent. People really don't want to talk about it, and I was actually having a conversation outside about how it's a bit of a face and status issue. People don't really want to claim that they're distressed. It's about partnering with someone who understands that we are partners in this deal, and we're trying to bring the best interest on both parties, and not just sort of trying to be an executioner on it.
Chung, can you give us the legal definition?
I mean, what deal in Vietnam is not distressed right now? I'll leave it to the experts to define what they think distressed is, whether it's special or it's opportunistic. But if you want to look at it from a somewhat legal angle, I guess the word that pops up for lawyers would be whether the company is insolvent or not. There are all kinds of ways to define, describe the deals, and I know there are experts here that will bring a business model into Vietnam, but it's sort of a broad picture, and again from a legal perspective, we find that the things that get investors most concerned, spending a lot of time looking at it, is the viability of deal structures. And in this regard, it goes to a bit of a corporate, so 101 basic stuff about rules of Vietnam and how they're not always the same as in other countries. I'll just give 1 or 2 examples, and I'll get to talk more about it later on. For example, like a simple majority decision in Vietnam is not based on 51%, it's based on 65%. There are public companies and private companies, and there are foreign ownership restrictions depending on what they are. So I'll talk more about stuff like that a bit later on. But back onto distressed assets. Yes, we've done distressed M&A, but I think, and Barrett will probably agree here, that one of the main difficulties is actually getting the assets. Now, in particular, I'm talking about property, real assets. In Vietnam, that's all heavily tied into the land, certificate of land use rights, a hell of a lot of licensing around it, and it's just not easy to sort of take that asset out of the company, and especially if you're a foreign invested company. If you're a foreign investor. We are currently working on one deal in which the investor, which is a corporate, was looking to take over the land and the real property. But because of the unwieldy ways of the laws and the procedures and practice in Vietnam, that has not been possible. So they did negotiate restructuring the debt with the bank, the relevant banks, but in the end they are going to buy, as a shareholder, they have to buy the company. They can't just take over the assets.
Great.
Let me just add a very quick sort of way that we would probably want to define ourselves as well is when some of our friends from the previous panel would have left the party is probably when we would probably find that as being a proper distress situation. When the growth capital is not there, and then we get that problem coming.
Great. Just very quickly, defining buyouts. We have done buyouts in this market. Typically, we think of buyouts as control investments. Our preference is to have an earn-out, so we buy control, and then we would step up our shareholding over time, hopefully structured so that the subsequent payments are tied to performance targets. Just a quick question for our panelists. How do you see, Chandra, buyouts in Southeast Asia potentially being the same or different from more mature markets?
Well, I guess in Southeast Asia, I guess the fact is it's not yet as mature a market in the first place. So I think the key issue is finding an entrepreneur who's actually willing to give up that control, and if you sort of extend that discussion to a more distressed situation, to recognize that he is distressed. So it becomes very challenging to basically find a willing entrepreneur willing to give up control, and for you to step in and basically, I guess, build out a platform. But in general, we do see an increasing trend in terms of the expectations of the entrepreneurs in terms of valuations. If you extend the discussion beyond Southeast Asia, I think China, which earlier had been a more growth market, is now mature enough for people to start looking at buyouts. Obviously, in the other regions of Asia, there's still a prevalence of history of buyouts.
Baron, what's your experience been like in terms of real estate buyouts, and what trends have you seen outside of Vietnam and within Vietnam?
Well, I think, to your point, right, I think management control is key to us. I think understanding, however, that the local partner does add significant value when you're talking about land and real estate. I think keeping them on the milestone KPI performance indicator to ensure that earn-out happens, that they perform as required. I think there's something to be said for moving forward with a local partner. Now, initially we wanted to do a lot of deals with convertible debt. I mean, that was kind of the appetite that we had. But now, given the risk-reward scenario that we're seeing, the asset. So I think, especially in the real estate market, I think there's going to be tremendous opportunity in the next 12 to 18 months. Frankly, I don't think it's bottomed out yet. But I do think that from an M&A perspective, I think you will see foreign investors, at least educated foreign investors here in Vietnam, come in and make some big plays.
Chandra, have you been able to do special situations for debt instruments, or have you just been looking at equity instruments?
Is that a question for Vietnam specifically, or Southeast Asia?
Throughout the region, and then if you can share your experience with Vietnam.
Sure. So we've been looking across the capital structure. I guess finding debt in the secondary market is a challenge, especially because the banks are not willing to recognize losses and sell off their loan portfolios. But having said that, we tend to do come from a debt perspective in most of the situations, and we strap on the equity component as a kicker for us. In terms of Vietnam, I think it's the same situation, but we tend to sort of look at the legal framework in the different countries and try to basically take comfort from the fact that if we can actually enforce our legal rights from a debt structure, in which case we'll probably be more debt intense or debt heavy. In countries where we think the legal structure doesn't allow us to enforce our rights as a creditor, we'd probably be more on the equity side of the story. So there we're probably looking for a large controlling stake and make sure that we have full visibility and control of what we're basically investing in.
That's a very good segue, I think, for Chung. What is the legal framework in Vietnam like for buying or selling debt?
Okay, I'll admit that I'll be more familiar with equity rather than debt, so I'll talk on that note. And then my first question is, how much time do I have? Okay, but first I just want to pick up on some of the points that the other panelists have raised, so looking for opportunities. I'll just reflecting on our own experience right now. I dare say that notwithstanding the challenges, whether it's globally or in Vietnam, or finding people still coming in, still interested, still looking for opportunities. Now, in terms of opportunities, targets, I mean, you all know very well that that's the tricky part. And I think it's worth remembering that Vietnam is a very young jurisdiction, really opening up in the early 1990s, gone through its ups and downs, okay? And a lot of the people, a lot of the targets you're dealing with are founders. They're the old man in the family, his two sons that built up a business, got excited about going public, putting shares on OTC or the stock market. Then, when things go down south, they start looking for foreign strategic investors. They're willing to give them, say, 30%, 49%, but lo and behold, they're a public company, and there are restrictions around that. So you're talking about getting them to have earn-outs, looking at KPIs. You're going to find there's going to be a lot of, I think, both cultural and regulatory sort of challenges, interferences that you would have to deal with. Now, in terms of the, again, I'll talk about sort of like the equity. Again, this is where I said that I think some of the basic laws have to be laid out. Investors will come in, trying to propose and work out a deal structure that, of course, financially makes sense for them. Great, bring it on. But this has to be filtered against laws of Vietnam. And we can't make an assumption that what a foreign investor is accustomed to is actually going to fly in Vietnam. Okay? So we have things like investment law, we have things like enterprise law, securities law, competition law. So there are actually many layers that you actually have to go through. Now, I'm just going to touch on a few key things that I did allude to earlier. Now, for example, we talk about management, and everybody says that, right, I'm going to put in 30%, I want a board seat, and we see that commonly. Now, if you're talking about a joint stock company, i.e. a company that issues shares in Vietnam, in particular, one that's public, traded over the counter or on the stock market, you need to be a shareholder of at least 6 months in order for you to nominate someone to go onto the board. And then on top of that, it's just your ability to nominate. you need to go through what I call cumulative vote, in which other shareholders vote in that candidate. You talk about removing that guy at some point. You think that he's your guy. Well, that person can again only be removed by the shareholders meeting. Okay. So if you're working with the chairman of the company, he's the founder of the company, he's the old man, he knows the business, and you tell him that, okay, look, I'm going to buy that 30%. We're going to do it by private placement, all right? And you give me 2 board seats. I mean, there's a real question out there about whether he can give you 2 board seats or not. Okay? So that's just an illustration. The other illustration I mentioned was, again, around the whole decision making. Simple majority. Most of us are accustomed to the idea that I got 51%, okay, I can pass into majority decisions. In Vietnam, that's not correct. It is 65%. So again, we're seeing people coming in doing deals and say, oh yeah, we want a 51% on the assumption that they can pass simple majority decisions. But in Vietnam, that doesn't work. It requires 65%. Lastly, I'll just point out that Vietnam takes this investment model from China. Of course, you can argue that China is now a few steps ahead. But the point there is that there are market access restrictions in Vietnam for foreign investors. So again, don't make the assumption that, so the point is that you have to look at the business activity of the target, and don't make the assumption that foreign investment is actually allowed in there. There's one very public case of Micopha, which is a listed Vietnamese drug production company. They wanted to do import and distribution. They couldn't get the license because they were listed. They had all of 4% foreign ownership, and the government said that no, you got 4% foreign ownership. That's foreign invested. And under WTO commitments, we don't allow drug distribution by foreign-owned companies.
Maybe I'll just add a few quick comments on debt in Vietnam, and I think Chandra has touched a bit upon this. When we look at special situations, we're very cognizant of the amount of debt that's in the company. In Vietnam, there is an institution, the Debt Asset Trading Company, which has a license to buy and sell debt. The problem, which Chandra's previously mentioned, is that banks aren't very willing to sell debt at below their cost. Typically, a bank may be willing to roll over the debt and extend the term. We really haven't seen situations where they're willing to reduce the principal. They may reduce the debt, but generally it's quite hard to buy debt. In international markets, sometimes you can buy debt at 60 cents on the dollar or less. So if you come up with a complete financing package, you may provide, you may buy out some of the debt, and you may also provide new growth capital as well. Aaron, have you come across situations when you're looking at real estate assets where there's been a lot of debt on the property, or where the property has been mortgaged to others, and how would you go about resolving some of these issues?
Yeah, we're actually looking at a project, a hospitality real estate asset that was highly leveraged and actually was fairly close. It was an interesting structure because what we did was we took, we were able to what we believed to negotiate the debt down, but and also actually refinance the asset with an offshore bank. But they wanted some sort of collateral, which, as you know, is very difficult here, especially with real estate. So we actually were working with a local bank to provide a guarantee for that offshore bank, and basically to be able to collateralize or hold the real estate onshore for the offshore entity. Eventually that deal fell apart for obviously valuation reasons. But at the end of the day, I think, again, given that people see this sort of waterfall of real estate assets that could eventually hit the market, people are getting very, very creative. You're laughing. sometimes he's my attorney. So. We're getting very, very creative with the structures that they're willing. Now, again, it's a risk versus reward sort of scenario, right? I think, and as prices come down, as you know, as valuations become more realistic, people tend to sit at the table and come back again to some of the deals that they've looked at before. So again, but with real estate, it's very, very, obviously a very, very touchy situation when you're talking about.
Ask you guys a question since you're based over here in Vietnam. I guess, do you think that the issue might be forced at a certain point when collateral values drop so dramatically that the banks have no other choice? And if the NPL numbers keep on rising, as we probably know they are, the State Bank of Vietnam has no other choice but to, for a recapitalization sort of perspective.
I don't have, actually I report to the shareholders, the managing partners are my shareholders, so I'm going to let David take a step out of this one and I'll answer it for you. I think that, let's talk about the US economy if you want. They're just kicking the can down the road, right? I mean, David mentioned it already. So, to be real, I think there will obviously be some things that fall out of the sky, but in general, I think it'll be just pushing it out. That's just my personal opinion. David, you may disagree, but.
I'm perhaps a bit more hopeful. We're starting to see some precedents around bonds being traded at below the principal value. So if you start with bonds issued by state-owned companies, that may lead you to debt. But I think that will be a step. I think there's been discussion in Vietnam about setting up an asset management company similar to what happened in China 10 years ago, where the asset management company would go and buy loan portfolios, for example. So I think there are some hopeful signs, but that needs to come with precedent transactions as well as the legal framework to enable kind of true distressed debt investing opportunities.
I would just add one thing, that if you look at what happened in 2008, Vietnam was actually ahead of the curve, and those of us that were here know that inflation went up 24% in March of 2008, and then the whole thing came crashing down in October. So also look at the signals in the global economy right now. If you read the Wall Street Journal today, exports from Singapore to Europe are down 28% in August. It's the biggest number they've seen in 10 years. The CIC, China Investment Corporation, just came out and said that in 2011 they posted a loss, which was the first time since 2008. They are now going in directly and starting to invest their own money rather than just be passively investing in other countries. So I think, again, I'm not trying to predict the future or things like that, but looking at the global economy, you have to understand how will that affect Vietnam going forward and available capital to invest in some of these larger or even smaller assets.
Sure. I mean, I guess my view would have been, because of what's happening in the global economy, that probably leaves very few options in Vietnam to actually kick the can on the road. And they have no choice but to sort of comprehend the issue.
Ironically, that makes Vietnam look better too, right? I mean, with the...
If I could turn quickly to some of the challenges of doing buyouts and distressed investing, perhaps Chandra, if you can share some of the challenges you see kind of in the region, and then potentially in whether either we can put in people from our post-investment team so that we can then exit our investment. I think as you go into any deal, whether it's a distressed deal, a buyout, you have to look at your realization business, if it's distressed, on a sound footing, or whether it's a buyout they're looking for when they go trying to buy businesses. Baron, do you have something to add?
Because if you don't have that transparency, I think people will automatically fall back on if this person is communicative, can understand the role. I mean, basically, remember now, this structure is handled by fairly sophisticated investors, but there are pockets of which, we have opportunity to come in alongside or can, help them. Those people don't quite understand the whole offshore onshore. They may claim that they do, They may claim that they've done it before, again, because we're talking about a very sophisticated structure that they'll need to understand. But again, even beyond that, I think it's about being able to.
You know, we came across an interesting situation where the owner of the business, who currently owns 100%, gave us the financials, and there was a very small footnote which basically said, you know, there was an amount of a fairly sizable amount, left pocket, right pocket. For him, corporate governance itself is a new thing. So just filtering down that message.
Those are very good remarks. I mean, corporate governance is almost like a mythical concept in Vietnam. You mentioned that the legal framework is a challenge. Now, in terms of the challenges of a deal and starting something as boring as due diligence, I mean, again, I think that American knows that. All right. Land is, rightly so. It is sort of classified for different uses: commercial, residential, agriculture, and all these things will take time to change. But the businessman is eager. He goes forward. He takes on the land. So once you do a due diligence in there, it wouldn't be surprising at times to find that, okay, your use of your land, the right for you to occupy that land, well, from a legal perspective, that's all becomes questionable. And again, it comes down to risk. Investors will make a decision. Management is really something that I talked about. How the level of ownership you must have in order to make certain level of votes. Your ability to put someone on the board. And just to illustrate that point further, there was a fund that was exiting. It could be another state-owned enterprise. It could be the Ministry of Industry and Trade. And a lot of what you want to achieve from a management point of view would probably require a lot of buy-in from these guys. So those are the guys that you really need to talk to. Okay, very quickly, just a few more things. Private placement for public companies, that's doable. For private companies, the four of us have a joint stock company in Vietnam. We run out of capital, we want to bring in a new guy, issue new shares. That's not doable yet in Vietnam. There are laws on it. In fact, a new decree has come out to sort of try and further that thing along. But the Department of Planning and Investment has just, so far to my knowledge, refused to do it. And we had deals that got stuck because of that. Lastly, public companies, usually those are the interesting ones that investors might go for. But public companies, there's a 49% foreign ownership. So if you are thinking of taking more than 49%, if the major shareholders are willing to relinquish, you still have a problem. They can't do it under law. So these public companies have to go private. Is there a procedure for that? There's something in the law. How easily is it done? Questionable.
We're just wrapping up here. Are there any questions from the audience? Otherwise, I'll have our panelists share an example of what's gone well and what hasn't in a real deal. Okay. Perhaps then, if panelists can share an example of a distressed or buyout deal that's gone well or gone badly.
It's lunchtime. No. Well, I was just going to share. Actually, I'm those of you who have seen me speak before, pretty pessimistic normally about Vietnam, but we're about to do a deal with a furniture manufacturer here, where it's a debt situation, providing working capital on an offshore level, honestly, only because, as we all know, there's some issues with the banking system here in Vietnam. So we were able to provide some debt for them to expand their business, as well as some working capital in addition to acquiring real estate here. So I don't think the market is dead. Again, I think there's some appetite for people who can really show a proven track record moving forward and have a solid background. It's a 3-year-old company, so not a long track record, but a positive track record.
In terms of what has gone well or gone bad, I think it's too early to tell because we started investing now in this market, so I think it'll take time before we can say whether it has gone well or gone badly. but I think you can sort of look at signs of how things are going and what you think you did well and what you should have done. And I think in that context, what I'll probably share is there are times when you probably think you structure well enough. I think you can never structure enough. And there are times when we try to protect ourselves enough. I think you can never protect yourselves enough. So I think the learnings that we've had is overstructure, over mitigate the risks. Because when it comes to transferring those shares that you have as collateral, the owner may not show up to actually sign on the documents that are required to be transferred. You have to basically then use other sort of protection measures that you might have to actually then get the owner to come in and sign the documents and then transfer the shares. So I think, putting in place those alternatives, if this doesn't go well, I have a backup plan in distress situations. This becomes a lot more important.
Sure.
I like happy endings. So I'd say that what has gone well is that compared to Singapore and Japan, Vietnam has a population that's getting married and reproducing. That's gone very well. Vietnam has great demands for goods and services, okay? And that makes it exciting for investors. So notwithstanding the difficulties that everybody's facing, business doesn't sleep. People are still coming in. They're more cautious, but they're coming in, they're looking. And I find that my views, anything that's food and beverage, agricultural, pharmaceutical, these are all good stuff, and certainly, financial services as well. I'll just end off with one last story. I was in Shanghai for the Pharmaceutical Compliance Congress, and I spoke to someone who's doing medical devices. And she's based in China, she's busy, and she started saying that, oh yeah, just haven't had time, didn't take a close look at Vietnam. So I jumped in, I said, oh yes, I understand. My clients tell me that Vietnam is never the biggest market, but the fastest growing, usually the fastest growing. I can understand, you don't put all your resources there. And she corrected me and said, no, actually that's wrong. Vietnam has become a very substantial market for us, and that was in medical devices. So I'll end that.
Well, thank you everyone for listening, and thank you to the panelists.